In 40 of the 70 biggest cities. This is on a month-on-month basis. Let's bring in Peter Churchouse, who's Managing Director of Portwood Capital. You've got almost 30 years of experience as far as Asian property goes.
Getting more than that now.
Is it more than that? It's probably our notes are old. Anyway, it seems that, well, the policy is working. The thing is, at what point do they start having a level of discomfort with the falls? Well,
quite frankly, I think you can say that the China property market is approaching gently the bottom of its glide path, and I expect we'll see the touchdown sometime over the next 3 or 4 months.
Okay, well, we'll indicate that we are approaching touchdown, as you put it.
Well, we've basically seen average property prices down about 1.5%, according to the government's own statistics. Of course, that disguises a lot of variations from city to city around the country. If we look at the numbers right now, we've seen about 9% decline year-to-date in property sales by value. But in terms of actual square footage or square meters sold, it's up about 4 or 5%. So they've definitely succeeded in slowing the market down in terms of price appreciation, and I think that's what they want. They don't want to see a crash, because that'll lead to all sorts of problems for the banks, and that's the last thing they need right now.
Right, you're confident they can engineer it?
Well, it looks like they've engineered it pretty nicely so far. As I say, we're seeing volumes up in terms of square footage of sales, and that's largely to do with promoting the first home buyers and the cheaper end of the market, and really targeting the speculative ends of the market. Yeah. So there's been a differentiation here of policy.
One of the big bugbears was, of course, affordability, and the lack of affordability. I mean, in the time while this has all been falling back, the property market, have wages gone up to increase that affordability factor?
Absolutely. Affordability is improving significantly. Wages and salaries are up well over 10% in the past year. Property prices generally are down a little bit. And of course, you've seen recently cuts in interest rates as well. And banks are being encouraged to lend to first-time buyers. They're also allowed to actually cut the rates that they charge borrowers from the recommended rate by up to 15%. So that gives them scope to increase affordability even better. So I think they're engineering a fairly gentle landing here, which I think many countries would love to see.
Okay, but how much of this has now really been baked into the price of these property companies trading on the Hang Seng and indeed in Shanghai?
Well, the stocks in Hong Kong, we were probably a little bit too early to recommend them, but to me, in a way, the catalyst for a pickup in property stocks was the decline of the European economies. That would lead China to be concerned about its own economic growth, and therefore to embark on stimulus measures in the domestic economy to boost domestic consumption, housing included. And that's exactly what we've seen. The government keeps talking a tightening book, but in fact is easing policy, which is impacting positively on the property market, and property stocks have reflected that. The listed stocks in Hong Kong have reflected that very nicely in the last 4 or 5 months.
So do they have upside? That's the point here.
I think they still do. We've been up between 20 and 45%, depending on which stocks you look at, since the beginning of the year, in terms of China property stocks listed in Hong Kong, but they're still only trading at just over 8 times forward earnings. They're trading at about a 43–45% discount to their underlying asset value. So I think they're still below their long-term averages in terms of valuation. I think there's still some upside in the back end of the year.
Peter, very quickly here, when you look at what's happening in terms of the Chinese property market at least, what about the rest of Asia? Is there value anywhere? And, you know, to put it politely, some of these markets are highly illiquid.
Yeah, that's right. Certainly, we think Thailand, for example, is a less liquid market.
Well, it doesn't even have a secondary market, which is
it's like most developing markets. The secondary market takes a long time to establish. But I think Thailand stocks are looking reasonably okay. We're seeing domestic consumption looking good there. The government is trying to promote construction following the floods of last year. So I think that market looks okay. Singapore looks a little on the oversupplied side.
Oversupplied?
In terms of both the housing and office. But stocks, again, are probably looking okay. They're probably positioned for that. And I think we'd probably like to see a bit more upside, maybe in the residential sector, which has been hit pretty hard because of this oversupply. As the supply gets eaten up, we'll see those stocks, I think, bounce back again in the third quarter of this year.
And Hong Kong?
Well, Hong Kong, I think the developer stocks have been hit by government policies, and if we see any kind of easing of government policy there, I would expect to see the developer stocks outperform the investment property companies.
The new chief executive, Siwei Leung, what about him? He talked much about on the hustings about making homes affordable for the poorer residents.
Well, I think affordability is a big discussion, obviously, in many countries around Asia, particularly in Hong Kong. I sense that the new chief executive will probably look to increase public rental housing rather than go back into things like the home ownership schemes or subsidized home ownership for the lower income classes. Focus probably be more on public rental, subsidized public rental, which I think will not upset the developer community and also upset people in the private sector who own their own homes.
Peter, thank you so much for your time. Peter Churchouse there from Portwood Capital. Right, got to take a break, but